Welcome back to the channel. My name is Brad. This is my weekly review of AMZY. First of all, where am I at with my investment? I have 100 shares and I'm currently down $12. After a bloody week, I think I got in at a fairly decent price, but we'll see where it goes from there. Look forward to this in future episodes. I'll be reinvesting 100% back into the stock until I have what I call house money. And then we'll go from there and see what happens. Looking at the strikes this week, they sold staggered strike prices. I always like this. This is something that Neos does. But this week, Yieldmax actually staggered their prices. Just to give you a little more detail, it brings in almost 9 cents when you look at the total revenue against the shares. I also looked at how far they were out of the money. One's 3.5%, one's 5%. I also looked at what's the probability of them ending up being in their money. Now, this is only a probability. It's not rocket science. This comes off of the strike prices and the deltas as of Friday afternoon. Right now it's 19%. I know when I used to sell options, I would always try to look at that 20% range. I also noticed that the 180 strike price is 11.5% likely that it'll end up in the money. So they're selling these fairly out of the money. Statistically, they're probably not going to go into the money, but this is the market. Anything can happen, and we could have a total reversal and it blows right through these strike prices. But at least when I look at these, this is some place that I would personally sell strikes, being a 20% or a 19% probability. I'm really pleased to share that I've made my own tool. This is the first time I'm demonstrating this tool, what it can do. I am looking at AMZY, and I can compare this to any stock, any exchange. I can look at how much do you have to put back in to be at the break-even point on any of the Yieldmaxes, curves, you name it. It takes me 10 minutes of downloading the data, dropping it in, and it does all the math for me. This also includes reinvestments, and I can put a percentage of reinvestments. So I can say, hey, reinvest 5% like I did this time, which is break even, or 0, or 80%. I can also compare it to SPY or QQQ. And SPY is also calculated in with 100% reinvestments. So it's a fair and accurate portrayal of the two. As of right now, if you reinvested 100% of the distributions, you are beating the market. If I graph out where their strikes are, you can see where they are compared to current price. We're sitting just about where we were a couple weeks ago with their strike prices. Do I feel that the pricing of the market will go back up? Normally, after a big bloody week like we had last week, we should probably expect some type of recovery this week. No guarantee. It could be another bloody week. But we know that, hey, we'll capture some of that upside as we go back up. I went out to Seeking Alpha, read a couple articles, links below, links in the pinned comment below, and I wanted to discuss what they were talking about. I don't know if anybody uses fast graphs. I've tried it. I'm going to say, hey, it's okay for growth investors, not kind of what we do here on the channel, but it's always nice to know that you're in something that somebody might consider to be a growth stock. So they took this graph off fast graphs. They calculated in operational cash flow and they came up with where the price targets would be. Now, I think, my personal opinion, they were a little aggressive with their calculations. But overall, Fast Graphs actually looks at averages, which I like, and it's projecting where it's going to go on operational cash flow and projected pricing. Now, does it always happen this way? No. But when it's below the blue line, it's usually a good buy. That's what I've learned from Fast Graphs in my time of using it is, hey, when it's below the blue, it's probably a decent time to buy. And right now we're currently below the blue. Do I think it'll get back up to the blue? In time, as long as things don't change within the market structure or at Amazon. One other thing that we talk about Amazon, and it's not always out there for people to understand that maybe Amazon has more than just Amazon Prime and getting stuff overnight or same day. They also have AWS. And again, I went out and read an article. They're predicting AWS becomes more revenue growth over the next few years, which it probably will be. Everybody's going to cloud and that kind of storage, and they're all getting into the AI game. So AWS is well positioned for this, and we should probably continue to see growth in AWS over the next few months. If you like this content, please hit the like button and subscribe. Look forward to seeing you on other episodes. Let's talk about cloud infrastructure market share. Who leads it? I would have guessed it. Google. That would have been my guess. Everybody uses Google Drive. I would have assumed Google was leading the way, but no, AWS leads that, which is a very interesting conversation. AWS is going after different clientele than Google is, and they lead in this infrastructure of cloud market share, which happens to be a $79 billion with a 22% year-over-year growth rate. So, seeing this, knowing these are different revenue streams, I'm pleased to be able to participate in this type of a business. Lastly, reading several of these articles, where is the advertising dollars being spent? I didn't realize personally that Amazon was getting a lot of advertising dollars. Not as much as Google and not as much as Meta, but hey, they're getting advertising dollars, a diversified cash flow. So not only are they getting it from AWS, not only are they getting it from sales of products, they're also getting advertising dollars. CAGR, right, compounded annual growth rate, is 23%. That is a decent number. Anytime you see a CAGR above 20%, that is something to maybe look at on anything. It doesn't matter if it's advertising or anything, but once you see that 20% as a CAGR number, that's an interesting number to look at. Again, links below to all the articles where I found this information. That's going to end this week's review of AMZY. I will be adding AMZP to next week, right? And we'll be looking at the distributions coming up. I think I get a distribution on my one share that I had, but not the 99 that I purchased. But anyway, we will take it as it comes in, reinvest it, and continue to track this. Until next time, God bless.